Hello, this is Steve Malone with ComStvex. I hope you're doing well today and you're getting some good trades. Over the last few months, we've been trading the Dots Guppy method. And honestly, in the last 20 years of my trading, I've never seen so many traders pick up a model so quickly and do so well with it in such a short period of time. And it truly kind of warms my heart from the standpoint of being a trainer for a number of years, training people how to trade the markets, and finally seeing a model that people are really picking up and running with. If you want to learn more about it, go over to www.compassfx.com/dots to learn more about it. What I want to do today is to share with you another trading tip. I get from time to time folks writing me, asking me specific questions about trading the Dots Guppy method, and I want to share one of them today. I had a trader write me and say, "Hey Dean, I noticed that there are times where you will go ahead and enter the market right away at a specific entry level, where there's other times you'll let the market test the level before entering. Why do you sometimes get in right away at the entry level, and other times you allow the level to be tested and then step in after the market's tested it?" It has a lot to do with, in my opinion, the way you read the market. Are there chart patterns? Are there previous highs or lows? Is there a strong support or resistance that needs to be broken? These are things to consider when we're looking at trading at the Dots entry levels, whether it be the buy level or the sell level. So today I want to give you some examples. Taking a look at the dollar Swiss, this is overnight. Based on the Asian setting, we see that it made a move to the upside here. I really don't want to focus on that. I really want to focus your attention on this right here. You see this strong move. I see the angle and the descent, and see how big these bars are. See how big that bar is and this bar, and then it kind of gets a little bit, just small bar right back near the session open. Okay, and then all of a sudden something in the marketplace took place. We had some news in the market or something in the market took place, and we had this continuation of strong angle to the downside. And the reason why I give this example is when I see the market have some strong angle, especially these moving averages right here in the direction of the longer term is rolling over here. Now it's not the best setup based on the long term moving averages, but the short term Guppy multiple moving averages have strong angle, and something took place to give a lot of strength in that move down. Well, what was that? Oftentimes it's breaking a previous low or breaking a support level when the market's breaking to the downside. So let me step out and show you this on a 30-minute chart. Take a look at this. Do you see a chart pattern there? Absolutely. There's a double top pattern right here, and the market right in this area, we had broken that low. So we broke that low right there, and look at the strength of the market coming in, breaking that low. So when we broke that low, the market put on some additional strength. Could be because of something in the marketplace, could be a news item. We really don't trade high impact news, but what I'm looking at is something generated strong movement to the downside. Part of it, I think, is breaking the midpoint of a double top pattern. And so it was evident in the 15-minute chart, even though I didn't have the best setup in the long-term Guppies, I had a really strong angle here. So that would tell me, you know, it's time to trade this. There's no having to test it. It's making its move. It's already broken the previous lows back here. It's time to get in. Whereas if you take a look at the Aussie CAD, today we had a situation, again, looking at the Australian session open for Dots, you can see that the market came down and kind of bounced around here. Now, you notice I've set some lines here. I want to show you what I'm getting at with these blue dashed lines here. If we step out further in time, I'm going to go to the hourly chart so you can see this. You can look back here and you'll notice that the market had set a bottom over about a 3-day period of time. Going back to the 13th through the start of the 16th here, the market had basically set a bottom, and that bottom was basically between 10034 and 10044. So about a 10 pip range here, a little bit of up and down, up and down, up and down, and it had created a bottom in the marketplace. Notice though, the market tested this bottom before making a push to the downside, and that's evident as you can see over in the 15-minute chart. We'll go back to the end here, and we can see that the market was testing the bottom. So in this case, I'm letting the market test. And you can see it came down here 1, 2, 3 15-minute periods, pushed back up, tested it again for about another 3 15-minute periods. It gave a really good solid test of that level, and then we got the push down. That is when I'm looking to enter the market after a solid test, because the market is making a new bottom. When the market came down, unlike the dollar Swiss, when the market came down the first time here, instead of running straight through, the market said, whoa, we have a pretty sizable 3-day bottom that's been put in here. I don't know if we can break this or not. And there wasn't really any strength here. Even though I like what I see in the long-term guppies, the short term was having the near amount of strength as we've seen in the dollar Swiss a moment ago. Okay? Let me give an example of a couple more of these. Euro pound. Look at this. Today we saw a bit of strength in the euro and in the pound at the same time. So, and they were kind of going back and forth with a lot of the weakness we saw in the dollar. And so there's a lot of up and down, up and down, up and down. And so we were testing this break to the downside. And then when the euro gave and the pound continued its strength to the upside, we saw the move to the downside. And also, let's go out to the 30-minute. Voila, another previous low back here that the market was testing. As a matter of fact, when the market broke and came down, see that low right there? It was coming down here and testing that area right there. Look what the market's doing too right now as I'm doing this video. The market's literally coming back up and testing that previous low point. Also today we were looking at the pound yen. Right where I have it marked up here on the chart, that for many people, that's a buy entry. Let's go. The short-term guppies look great. The long-term guppies look great. Let's go. And some people were hopping in on this. So I said, whoa, wait a sec. If we've noticed over the last few days, the pound yen's just been going up and 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 up. I mean, literally, looking back in time over the last week or so, this thing has made a substantial move up. So, but not even having that knowledge, I would think it's always good to go, let's look at the bigger picture. Where's it going to? You can say, well, it's going to that dots level. Yeah, but let's just take a look, because price has a tendency to go back to where it's been before. So has it been up this high? And did the market sustain that high? Well, if we go out and take a look at the hourly chart, you can see that we had a high back on the 15th here and went shot up there and fell right back down. And then last week, from the 10th through the 13th, we saw that the market up, down, up, down, up, down. And we have a range here between 156.45 and 156.66. I mean, we got a 20 pip range here, and that's all the potential to the upside there is. So looking where my buy target is, I'm kind of like, a little iffy here. It'll have to actually sustain a break of this guy to see it push up higher. So again, a reason why I'm not wanting to enter right now was even though the pound was strong today, we also had some strength in the yen, and that's not going to allow the pound yen to continue running to the upside. If we had weakness in the yen and strength into the pound, that could have pushed on up. But set that aside, we still note that it's got some highs it's got to take out back here. So the next time you see just the most beautiful setup, this is fantastic, it's running, it's going to hit that level, let's roll, this looks great, do yourself a favor, go out in time and take a look. 30-minute chart, hourly chart, just go back and say, hey, where have we been before, and did it sustain that level before? Okay, and so looking at the pound yen, it didn't sustain it. It fell right back down. Guess what? I would say that even though you have these three high points, the average high and that whole 3-day period of time right here is right where we're at, right at our entry level. Probably not a good time to enter until the market works itself out to go higher. Well, folks, I hope some of this information about when I decide to get in right at entry level and when I decide to allow the market to test a level. And sometimes what I'll do is I'll put a pending order just a bit beyond the level, allow the market to test it, go a little bit further than the entry level to actually enter the market at that point and then trade on to the target 1 or the target 2 level. Well, folks, Steve Malone with Compass FX. Hope some of this information about when to look to enter at an entry or when to allow the market to test an entry before entering will help you in your Dots Guppy trading. Y'all make it a good day. Get some good trades. Talk to you next time. Bye-bye.